And in our top business story, the head of the country's credit bureau has revealed that residents will be able to get a copy of their credit report online by the end of the year. According to a local report, Marwan Lutfi, the chief executive of Al Ittihad Credit Bureau, stated that online service will be launched in the fourth quarter this year, in which customers will be able to submit their documents and IDs online and request a report. Mr. Lutfi added that the digital service should mean that people only have to visit their offices when they need to have a long discussion or they want to inquire about a dispute. The Credit Bureau opened in November, but according to the report, concerns surrounding who would be responsible for incorrect data made some banks hesitate to use it initially. While the issue has now been resolved, the banks are not obliged to use the Bureau when making lending decisions. Nor do those seeking loans need a copy of their credit history. To help keep credit growth in check and prevent consumers and corporations from overstretching themselves, the federal government passed a law in 2010 to establish the Bureau, requiring all banks to participate in giving data. The latest Bureau figures show that about 3.1 million residents have 6.69 million active loans. Both those numbers are up 10% from the end of December. Driven by strong banking sector growth, Dubai's corporate earnings expanded 3.7% year-on-year to $4.1 billion in the first half of 2015. The banking sector, which contributed 12.4% to the Dubai financial market's incremental earnings, recorded 32% growth in the first half. However, this was partly offset by the real estate and construction sector, which was down about 10%, which accounts for 32.5% of the consolidated earnings of the bourse, according to data compiled by Global Investment House. The consolidated corporate earnings of the UAE declined 0.6% in the first half, as Abu Dhabi recorded a 3.7% drop during the same period. On the DFM, out of the 9 sectors, banks were the major gainer, with 32% rise in earnings, followed by consumer staples 12.1%, industrials 4.7%, services 4.3%, and transportation 2.3%. Investments and financial services dropped 45.2%, followed by insurance at minus 25.8%, real estate and construction dropping 9.9%, and telecommunications at minus 4.7%. Over in the capital, Abu Dhabi's corporate earnings decreased 3.7% to $5.5 billion during the first half. This was due to a fall in the earnings of energy, telecommunications and insurance sectors, which added 11.3% to the accumulated fall in the bourse's earnings. The relationship between currencies and Dubai's real estate prices has been shown to have a significant impact on the market, as new research shows that residential prices in the third quarter of the year have continued to decline compared to the previous quarter. In its Q3 mid-quarter Dubai residential research note, FIDA Advisory states that its analysis reveals a significant relationship between 3 key foreign currencies and Dubai real estate prices. According to Jesse Downs, the managing director of FIDA Advisory, the key currencies are the Indian Rupee, Great British Pound and Pakistani Rupee, with changes in Dubai property prices appearing to be linked to the fluctuation of these currencies. FIDA's Dubai Real Estate International Demand Index fell significantly in the first half of the year, driven primarily by currency fluctuations, which indicate a very low propensity for international real estate investment into Dubai. In the first half of the year, midpoint exchange rates for all currencies included in the index were down against the dollar when compared to 2014, except the Chinese yuan and Hong Kong dollar. Apartment transaction volumes were up 3% compared to the same period in 2014, but transactions for single-family homes, also referred to as villas, were down 3.2% compared to the first half of 2014. For the communities tracked by FIDA's House Price Index, transaction volumes were down by 28.2% for apartments and down by 8.6% for single-family homes. Additionally, apartment lease rates decreased a nominal 0.4%, while sale prices decreased 2.7%, pushing yields up to 7.4%. Lease rates for single-family homes decreased 1.3% and sale prices decreased 2.6%, which pushed yields up to 4.8%. And despite the current slowdown in Dubai's real estate market, an upturn in sentiment is expected later in the year. That's according to the CEO of Deyaar Developments, who made his comments during the launch ceremony of Phase 1 of the 2.5 billion dirham Midtown project. Saeed Al-Khattami, the CEO of Deyaar, along with senior representatives of the developer, announced that bookings for the Afnan district will begin next week. Comprising of a total of 7 residential buildings with a total of 659 residential units, the Afnan district will be completed by mid-2018, while construction on the project located in the International Media Production Zone is expected to begin over the coming months. Prices for the units have not yet been disclosed. However, the 1.2 million square feet Midtown project will contain a total of 6 districts featuring a total of 27 towers that will have a total of 2,500 apartments. Aimed at mid-income homeowners, the size of the units will range from 425 to 2,033 square feet. Commenting on the current market conditions, the CEO of Deyaar said that no steep reduction in yields are expected, adding that investors should expect return on investment levels of 8 to 12% from the Midtown project when it is fully completed by the year 2020. Meanwhile, the Vice President of Sales added that a project with the right pricing, payment plans and location can generate interest even in slower economic conditions.
So long as you put the right components in the product and you go to the market, I don't think we should be much worried about the actual demand. Now, we all witness a slowdown in the market in general, but slowing down in the market does not necessarily mean that there is no sales momentum. What developers need to do is actually focus on the design aspects and make sure that they produce the right product to the market, and make sure that the investor would put their hands in their pockets and put the money and do the investment. So as long as you're putting the right components in the product, you should not be concerned. There is a slowdown. Slowdown doesn't mean that we should stop the cycle of the developments. Talking about the pricing, of course, we're talking about the right payment plan that provide the flexibility for the buyers. These are 2 things on the financial side. But on the design aspect, you have to make sure that you come up with the right areas. You take into account the ever-changing demands of the investors. The market is evolving, and the approach to the market by the developers has to evolve to take into account these changes.